Hello, Fintech leaders and builders. I'm Vasyl from INSART, the Fintech Business Accelerator. And this is Guts, Grit, and the Fintech Podcast. This is the show for the founders, for the investors, and for the tech entrepreneurs who are not afraid to take the smart risks to deliver the sellable products and build the brighter financial future. And today we dive deeper into who are the coachable superheroes and what is impact investing. And our today's guest is Mike Ma, managing partner from Sidecut Ventures. Hello, Mike. How are you doing today?
I'm doing great. It's a pleasure to be here. You know, we've gotten to get to know each other through the events through the years, and it's a pleasure to have just some time, me and you, to sit down.
Yes, absolutely. And thank you for joining. So Mike is the early stage VC investor baking coachable superheroes across different domains, fintech, health tech, ed tech, and climate. And I'm really excited to talk about all of that. And I want to shoot and start from, so I was discussing how do you select the founders and the startups to invest with multiple investors? And this topic actually arises all the time, coachable founders. And all the time, I'm very curious, what does it actually mean and how you can actually understand if the founder is coachable or not. So what is your perspective about that? So how would you define coachable superheroes, coachable founders? Who are they?
Yeah. So the way we, so at Sidecut, the way we diligence founders, the first two meetings feel very similar to most VCs. You know, the first is a general view and the founder. The second one, we do a deep dive in product and go to market, which, you know, all the companies that you've put out are really strong on that part. After that, we are a little different. We'll talk to our founder and say, what do you need help with other than money? And then we go and do it together for 30 days. It could be, we need help with product discovery. We need help thinking through D2C acquisition. We actually have to think about how to do deal weighted probabilities and revenue forecasting. We do something together accretive to the business for 30 days. And in that sandbox of those 30 days, that's how we figure out what coachable means. And what we're looking for in those times is that what I call action-oriented self-awareness. And what I mean by that is, look, when anytime a founder pitches me, and let's pretend this is their deck, right? The only thing I say I know about this deck, this is not what will happen. I guarantee it. I guarantee that it won't. So then the question is okay, well, how are you going to respond as the founder? And that's what we set up our time to do. So to go back to the idea of action-oriented self-awareness, this idea of self-aware is okay, well, look, hey, we thought X, this didn't happen, so we had to make pivot. We should do pivot Y, Z, or something else. That is understanding where you are and what realistic looks like in your projections, forecast, product development, etc. The other part is action-oriented. So in those 30 days, we don't expect to solve your entire problem. But we do expect not just for you to say, oh, we understand the problem, but to do something about it. And that's the process, right? And I love the name of your podcast because it so much represents the ethos of Sidecut, which is guts and grit. And that's what we do. We want to actually see it with our own eyes, not in a slide, not in a pro forma. We want to see if you say you're going to change the way you sell, all right, let's go through a couple calls. If you're going to say oh, we're going to build a different product and from our wedge product into product 2, all right, well, what does it look like? How are you doing customer discovery for it? We actually want to see the action to it. And that's what it looks like. And also, I don't believe that that's a mantle of only experienced exited founders. In our portfolio, we've done 11 deals this year, or about to do 11 deals this year. We have first-time founders. We have multiple exit founders. And it's a project and process everyone can get better at. And I think that's the most exciting part about investing at this stage.
So Mike, let's talk about numbers a little bit. So this is really smart approach to have like hands-on experience with your founders before making any decision whether you invest or not. 30 days sprint, really smart. Still, isn't it too, like effort and time consuming to stick with each founder for 30 days? So could you tell us a bit maybe about what's the size of your portfolio? How many deals would you bake like annually? And what is the conversion rate, between how many these hands-on sessions have you done and how many founders you have actually invested?
Sure. So we have done, so the answer to your question is a consequence is a great question. What is our hit rate out of this process? And our hit rate is about 1 in 2, which is really hard because you've finished the first 2 meetings, and that's the time most VCs start like the pro forma due diligence of docs and pro forma cap table and bank statements. And we still do all that stuff. So it's a pretty high bar, and at that we hit that. To the answer to the question of how many have we done? So we'll have done 11 deals this year. It's a little bit north of 50%. So let's say we've done this about 20 times, 18 to 20 times in it. But what I would say is this: why? And is it expensive? I think it's expensive not to. Here's a couple stats for you. The average marriage in the United States is 8.6 years. The average time as an early stage investor, I'm going to spend some time on your cap table, is about 10 to 12 years. Gosh darn it. We should go on a month date. Like, why do you want to be together for a decade if we can't even spend the time of a month together? The second thing is this, and this is another stat from Forum VC. 92% of VCs say they do value add. 61% of founders says it sucks. So why I tell every founder,
typical story,
Well, I just tell every founder, it's like, you know what? You don't like my advice? Awesome. Don't take my money. We don't have to look at each other till 2035 and ask why we're here. So to me, it was when a lot of my investors and prospective LPs asked, like, isn't it expensive to do it? And I was like, I think it's expensive not to. And in exchange, it's not purely altruistic. In exchange, as an investor, I get asymmetry. I know something about that founder. Forget the market. I know something that not only the market doesn't know, I know something that everyone else on the cap table doesn't know, which is how this founder does under the heat of battle. And that's something you can't find on a spreadsheet. You can't find a diligence document for. You can't do a regression line on it. That is the asset that I think is most important to underwrite at pre-seed. It's what gets me out of bed in the morning. And I think that's what gives us our edge.
Yeah, absolutely. So by the way, so they say that founders are coachable if they take the recommendations and advice. But how do you feel if they don't?
Well, it's funny. I don't do that. Like I don't actually, I tell every founder this. I don't know the answers to your problems. So we talk a lot about fintech, and I used to be the chief growth officer at Betterment. I ran advertising at Vanguard. I was a chief marketing officer of a mortgage tech called Own Up, which I came in post Techstars in their late stage growth. I was like, so all these experiences do not entitle me to tell a founder what they should do. The last time I had my fingers on the keyboard of a full stack customer acquisition in fintech was actually for a company we sold 4 years ago. That's a whole presidential administration ago. What I know to be tactically true can't be true. So coachable does not mean do what I say. I tell my founders, I don't know the answers to your questions. I just know the order of questions that you should be asking, and the answers you're going to have to find out. So, it's a very subtle point. It's a very nuanced point. If you've worked a lot in startups and advised startups, that is how I approach it. I don't know the answers to your questions. Your customers do. I really, the order of those questions I can help with, and the interpretation of the data I can help with, but you have to go do it yourself. I don't know. Does that answer some of your question?
So, probably partially. So you mentioned 10 to 12 years to spend on the cap table, and it's like a marriage between investors and founders. So let's talk about what's your exit strategy. What's your end strategy, end game with each of the founder after these 10 to 12 years of the marriage?
I don't think my answer looks much different than any of the colleagues or other previous guests on the show. We need liquidity and exits. I think the one thing is what we're looking for, what adds to that, getting acquired and getting exits, is that our process underwrites two things I think gives us an edge. One is because we, to your name, grits and guts, we spend so much time watching them grind at the early stage. We think it leads to more survivorship and that they'll be around for an exit. I think the second thing is that we focus so much on customer-oriented, customer-discovered traction that at those exits, they're going to be more likely to get the result we want because they're trained or screened or coached at the earliest stages to just have the mindset of, you don't know the requirements to your product. Your customers do. And I don't know what you see at early stage. That's a trap I see founders get into. It's like, oh, I know the requirements. I just have to build the requirements. I just have to finish the MVP. And I always have to sometimes remind founders, like, M stands for minimum viable product, not maximum. And early stage people always get caught up in like, I know the requirements. And I think there's a line between this coaching methodology, capital efficiency, survivorship, and eventually getting to the exits that we're looking for.
So speaking about the early days, and obviously a lot of founders, they are not surviving the early days. And what we have found, there are a lot of first-time founders, and we work with B2B fintechs mostly. They're running in circles while validating their demand and validating their product. So what kind of best practices, let's say, or success patterns have you seen how to be more efficient with validating your product, with validating your demand during the early stage of your startup?
Yeah, I mean, I'm a big believer in pre-selling, right? And so to simplify my view of lean, right, is don't design, build, then hope it sells. Sell, design, build, and and put yourself out there. What's the best prototyping? It's this. You could do prototyping with this, and you can sell it or get some reasonable approximation of it. You may not actually be able to get an order, but so that's rubric one. I think you can break through by just changing your mindset. Sell, design, build. The second thing we talk a lot about with our founders is you must get your customers to pay something. However, not all currency is financial. One of the rubrics we use at Sidecut is MART: money, access to networks, reputation, and time. So if you're going through the stack of trying to sell something, like, obviously, hey, I love this thing, it's great, cool, will you do a pre-sale order? Sometimes they'll say no. Fine. Switch to A. Well, you can't sign today, but will you give me access? Can I meet the people that are required to do it? Will you give me access to your network? And if they say no, like, well, give me a reputation. Can I use your name as a list of references or like people who are interested? Should I have them call? And if you're told no, and well, the last one is T, time. And can I meet you again to talk about this stuff? And to me, that's a descending order of currency that you ask in the sale to break through. And I think what you're getting at is like this whole conundrum, cold start, like, I need money to get traction. I need traction to get money, right? Like, and the way I think you break through it is get your customer to pay something, sell, design, build, not all currency is financial, and then work through the stack. And just when they say no, why? Why? And when you hear the right number of whys and they all coalesce, that's the product feature you should build. And as soon as you're done building it, you should go back and ask if they got the sale. And that is the minimum iteration process. And it's stuff that's in the books, but actually watching it implement on the order of days and weeks is the key to being a good founder at the early stage versus quarters and years.
So let's reiterate. How do you call this cube once again?
How do I call the what?
The cube, the four corners cube. Cell.
MART, like go to the supermarket. MART, money, access to access, reputation, and time. MART.
Okay. That's very
T is
cool.
the dangerous one. I always sometimes make it a lowercase t. Hey, can I meet you again? Can we just spend more time? A lot of people will just, especially with startups, love to spend time.
Absolutely.
I'll spend all this time. It's like, you know what? As a founder, you waste a lot of time. And so you just have to be careful about that last one. But when, if someone won't let you use their name and likeness as a reference, what makes you think they're going to sign $1 million order? And sometimes I have to check founders on that. Like, you understand they're not even going to let you use your name? What makes you think, and they're still on your pipeline? Why are they on your pipeline? They won't even let you use your name. What makes you think they're going to actually go to their boss, put their neck out, and disposition a portion of their budget to you? And those are the hard conversations. I mean, this is the subtle part of what I was talking about coaching. It's not like saying, hey, you should do more user-generated campaign, for acquisition in your funnel, or you need to use this particular KYC element. Like, I don't profess to know any of that, but I will ask questions like that. If you can't get the person to use their name, what makes you think they're a prospect in order? And that stuff, you probably see it all the time when you work with founders. It's like, you're not being realistic based on your own data.
Yeah. So, with the early stage founders, especially when they're like first time founders, we have seen that they want to build stuff before selling.
Yes.
Because a lot of, especially in B2B financial services, they say, okay, I need to have something so that I can sell to this bank, to this financial advisors, to the insurance company, whatever, because they don't want to buy, when I don't have a product. So how would you tackle this? How would you coach the founder on that?
I mean, like, look, I used to work at Bank of America. First of all, there's some customer selection of who your ideal customer profile is. And a lot of founders who come from, let's say, a big bulge bracket bank, or a big, top of line, that's all they know. So they think that that's where they have to go. So first of all, you don't have to sell there. There's no reason you wouldn't go to a community bank, a small local lending institution. And so one is just breaking this mold of like your previous experience as your ideal customer profile. It's probably not. And I sometimes go back to those founders, like, what a pain in the neck it was to actually procure stuff. So why would you subject yourself to that? You're smarter than that. You know that. So please use that knowledge to your advantage. I think the second thing is it's just, this is the mindset. And this is what we test for. Because if even if you're right, all the requirements and you spend X million dollars and build it and nail it, my feeling is you're lucky, not good. You're lucky, not good. There's only a couple entrepreneurs that can just design, build, and sell. One guy was Steve Jobs. The other guy spends time running Doge and a whole bunch of other, industry. Like, the vast majority of entrepreneurs, the rest of us, we have to grind it out the hard way, and you should embrace that. That should be, not only should you be okay with doing that, you should love it. You should love it. The best founders fall in love with the problem, not their solution. When you fall in love with your solution, and for me, and I only speak for me, you're no longer investable. You must fall in love with the problem. The problem evolves faster than you can ever iterate. The question is, can you keep up? And do you have the mindset, grit, guts, and gumption to keep up with that pace? Because that problem is constantly going to evolve. And if I'm going to be with you for 10 years, I'm betting on your mindset and growth versus your 0.1 release.
So speaking about the problems, so you're saying you're impact investor, and across domains like fintech, health tech, ed tech, climate, and there are a number of causes there, of course. So how would you define and actually measure if this is actually an impact product or not? So if they're actually impacting these areas or not?
Yeah, this is a tough question. In the world of fintech, I look at things as diverse as themes, right? And so themes I look at are, and things you see just having spent my life in financial services, right? Like I think people are underbanked, underinsured. I think it disproportionately affects lower middle income. I think it disproportionately affects people of color. So I look for these areas to invest in. Now, I would say overall impact investing is struggling to do, I think what you're getting at, which is like come up with like a total rubric and score at A, B, and C. And there's a lot of modalities and frameworks ranging from the UN SDGs, or if you're a health person, like social determinants of health, there's a lot of frameworks. I will say I haven't done that yet. And it's not an area where I'm trying to like universalize my impact across the portfolio. What I do is this. I do ask every founder in my intake form, describe in your own words what evil you're fighting in the world. And that's right next to how much are you raising? Who are the other investors? What is your traction? That's just as important to me. So I understand and conceive of what that is. And again, I think that's important because it speaks to mission. It actually speaks to TAM. If you're fighting a big evil in the world, if you're fighting, like, again, one of my portfolio companies is a company called MoneyStack in the fintech world. They do financial counseling for people with mental health problems. I've spent my life in financial advice, wealth management. I've also spent my personal life in mental health. Every mental health problem is actually a financial services problem. They're starting with problem gambling and they're growing like crazy. And they're going to move to substance abuse, and a whole bunch of other. I always joke with Alex, the founder, Alex, your TAM is limited only by afflictions of the human spirit and mind. And of that, they are infinite, right? I'm pretty messed up. So those are the areas I look at. And I'm interested, if we want to talk fintech, I'm interested in novel problems in the fintech world. And again, I've spent my life at Bank of America, Vanguard, Betterment, a whole bunch of asset and wealth managers in between. I'm really interested in solving the novel problems. Another one, which is the world's most unlikely fintech. It's a company called Simply Bail, like jail bail, like go into a bail bond. It is a completely paper-driven insurance product that leaves people in jail for 72 to 96 hours. And in that time, those people have lost their job, house, kids, who knows what, because a guy in a suit won't pick up the phone to bail them out. It is open table for bail bonds. You get out in 24 hours. You've digitized the platform. And I think it's a massive fintech to digitize an insurance product and also do embedded lending. Because if you get out of jail, you need capital, but no one's going to underwrite you except the guy who actually is going to make sure you show up on court on time. So those are the things I'm interested in. I'm interested in really solving real societal, unspoken about, but incredibly common problems that money affects people negatively, adversely.
So we at INSART say that we're on the mission to advance fintech businesses that redefine finance and expand the digital freedom. And basically, what does it mean? If the fintech product help person or company manage their money and finance wisely and save their money. So then they're on the right track. So if they're trying, if they're not helping, if they're helping to lose money, okay, so then this is not the impact investing then for us. Absolutely. So this is how we differentiate. So for example, some of the betting services like betting companies, gambling companies, they pretend to be fintechs because they also, process a lot of payment transactions, etc. But this is not the impact investing. There is a negative impact for the society and for the specific people who are involved. So that's why I really like your mission, and that I really like your focus on impact investing, finding the startups that are actually helping the society, helping the people, helping the companies.
Thank you. I have 3 kids. And to be honest with you, just to be totally transparent, I always think like, is this company building a world I want my kids to grow up in long after I'm dead and gone? And it's an imperfect science, but it's one of the nice things about being a solo GP is I get to decide that. and that is ultimately, it takes you out of certain things like, oh, we do pay FAQ for UGC creators making whatever apparel content. Like this for me, like, is it a fintech? For sure. Does it facilitate small business? Maybe. Yeah, it does for sure. But it's not, when I consider that against getting someone out of gambling debt and helping to answer the question after they've stopped doing DraftKings and daily fantasy, like, how to rebuild my life? How to rebuild credit? How do I save my first apartment? How do I budget restitution payments to my wife who left me? Like, that's not even a question in terms of like what's going to offer more impact.
All type of questions to resolve. Mm-hmm. So I also think that everything related like with nonprofits and managing finances for nonprofits is also fintech, because it's also like it's a huge impact. So you need to give back, and any solution that help you to do this wisely, this is also fintech. Yeah. What do you think?
I agree. I'll talk about my antique portfolio and a deal I love and passed on and missed. There's a company called Boost My School, which does help schools do more facilitated payments and payment facilitators, right? I'm a big believer in education. Holman Gao is killing it. My friend Ethan Austin from Outside Ventures brought me, and I think that's another great example of like, yeah, I think fintech can do. In fact, like when we were at Finovate together, like that was the last 2 panels I've been on at Finovate have been just like, I think fintech has the power to do such great things in the world. And at the end of the problem, everything's a money problem. And I just, I'm just excited to be surrounded by the part of the fintech ecosystem that calls those questions. And I think it's not altruistic. I actually think if you solve these problems, you're going to make a lot of money. You're going to make a lot of money. And
yeah, absolutely. As you say, it's about TAM. Yeah, so total addressable market. If it's a real problem, if it's huge, so yes, there should be market. There has to be market.
Yeah, and that's exactly why I asked this question of evil. Like, if it's this very small bore concept, like I think that's when the manifestation of that is going to be a very small TAM. When you want to take down, the economic injustice created by our justice system through bail, like, yeah, that's 1 in 3 Americans are actually arrested during their course of their adult lifetime. Like, that's a big problem no one talks about. Those are things I'm interested in solving, and I think they can make a big difference in the world.
Mike, to wrap up, what do you see specifically in financial world? What is the huge problem that you see and you are actually looking maybe to invest in, but which is still not resolved? And that could be, but let's say one topic that you think would be resolved during the next maybe couple years still not resolved, but like a trendy topic. But nobody still provided some feasible, reliable solution on this topic.
Yeah, I don't know
Why
how
that?
big. I don't know how big. I mean, like, look, I'm very big on understanding the lower middle income and social economic wealth gap. I think it's a massive problem, and I think it has tendrils and everything ranging from retirement to insurance to small medium business loans to jail, right? So that ultimately, I think there's a lot of money to be made at the bottom of the pyramid. I'm interested in solving those problems. It's probably too big of it's a multifaceted problem, and I think that there's a lot of opportunity that fintech can help with, and that's where I'm interested in and that manifests down to things like, without pitching particular companies, but just like non-credit based lending, right? Alt lending, integrated health fintech, right? Integrations between health and education, tying payments in the healthcare system to budgeting and personal finance, thinking about multi-generational households and the growing aging population and what financial planning looks like, which has primarily been a single family question versus, I'm going to be a sandwich generation. I have my in-laws and my parents and my kids, and that isn't a problem that people have thought about. I think those are that's the big theme. I'm asking fintech, like, fintech, solve the real problems. Let's solve some real societal problems, and I think it has impacts of all parts of the financial of the fintech ecosystem, from banking to payments to insurance to asset to wealth management to private markets. That's my overarching thesis, and I'm really excited to collaborate with people who share that vision.
Love it, love it. Mike, so thank you very much for sharing all these insights. And I truly appreciate that you have shared you're investing like in startups with impact. Few things I would like to highlight. I really love this idea of spending 30 days before actually investing, because a lot of investors, as I see, they're very focused on like, okay, due diligence, traction, so show me your numbers, but not actually dealing hands-on with the founder. Like, okay, how do you pitch your clients? Okay, how do you build stuff? Show me. But more, more focused on, okay, what are the numbers? And the other one, I really liked this MART approach, which is about money, access, reputation, time, so that your clients, your potential clients, your prospective clients, your contacts, partners, they could potentially pay you not only money, but also other currencies. And you need to earn these currencies. And this is not only money. Access, reputation, time, this is huge currency at any stage of the startup, at any stage of the company. So thank you for sharing this.
Thank you for having me on. It's a pleasure.
Absolutely, absolutely. And for all the fintech leaders and builders who are watching us today, so please subscribe to our channel, like this video, hit the bell button so you stay tuned for upcoming episodes with other top investors and founders that are shaping the next generation of fintech. It was me, Vasyl from INSART Fintech Business Accelerator, and Mike Ma from Sidecut Ventures. Let's keep building fintech together, and let's keep building the brighter financial future together. Thank you, and bye-bye.